Hey everyone, and welcome back. Ready for another deep dive?
Always.
Awesome. Today we're looking at Eli Lilly and Company.
Ticker symbol LLY.
LLY. That's right.
And for those following along at home.
Now you might be thinking, oh, another pharmaceutical company. But
yeah.
stick with us.
There's a good reason we're diving into LLY.
Yeah, and it all comes back to one of our favorite investors.
You guessed it.
Warren Buffett.
The Oracle of Omaha himself.
All right, so we're going to examine LLY through the lens of value investing.
Looking for signs of a durable, long-term business.
That could be a great long-term investment.
Exactly.
So let's get started with the basics.
What exactly?
Does Eli Lilly and Company do?
I mean, I know they make medications, but I'm sure there's more to it than that, right?
There is.
LLY is a global company.
Huge.
They're in about 125 countries.
Wow.
They have over 46,000 employees.
Dedicated to developing and making a wide range of medicines.
And we're not just talking about your typical prescriptions, the ones you see advertised everywhere.
Right.
LLY is involved in lots of collaborations.
Oh, really?
Licensing agreements.
Interesting.
They even have an animal health division called Elanco.
So they're pretty diversified.
Definitely.
Okay, but what about their financials?
Well, in 2023,
Last year.
LLY brought in $34.1 billion in revenue.
That's a lot of money.
And a net income of $5.2 billion.
That's impressive.
Wall Street is definitely taking notice.
So they're global, they're profitable.
What are they known for?
Yeah, what are some of their big products?
You've probably heard of a few, Mounjaro and Zepbound.
Oh, yeah, those are the groundbreaking treatments for
Diabetes and obesity.
Right.
And then there's donanemab,
Also known as
Kisunla,
Okay.
which shows promise as a treatment for Alzheimer's disease.
So they're working on some serious medical conditions.
For sure.
But what about insulin?
You're on the right track.
I feel like I remember hearing something about Eli Lilly and insulin.
You have a good memory. Eli Lilly was actually the first company to make commercial insulin.
Really?
Yep, way back in 1923.
Wow, that's a long time ago.
They've been a major player in the diabetes market ever since.
So they've been a leader in diabetes care for over a century.
That's right.
Okay, let's shift gears a bit and talk about the people running the show.
Who's at the helm?
Yeah, who's leading this giant company?
The CEO is David A. Ricks.
Okay,
He's been in that role since 2017.
so he's got experience.
Definitely. He's actually been with LLY for over 20 years.
Wow, that's impressive.
He's held various leadership positions, so he knows the company inside and out.
That's great to hear.
It's always reassuring to see that kind of experience at the top.
Especially in an industry as complex as pharmaceuticals.
Right.
But what about their overall approach to running the company?
Well,
Aside from just, having experience.
LLY seems to handle crises well.
Oh, yeah?
From natural disasters to the COVID-19 pandemic, they've managed things pretty effectively.
Good to know.
They also seem to prioritize ethical practices and social responsibility.
Which is becoming increasingly important.
Definitely.
All right, but let's talk about the bottom line.
The financials.
Exactly. How is LLY doing financially?
LLY is known for consistent revenue growth,
Okay,
high profitability, and a solid balance sheet.
that's what investors like to hear.
Absolutely.
Okay, but we'll have to dive more into those financials after a quick break.
When we come back,
We'll dig into LLY's market performance
ownership structure,
and their overall risk profile.
plus we'll reveal a surprising fact about LLY's history that you might not know.
Stay tuned.
We'll be right back. Welcome back, everyone. Let's jump right back into Eli Lilly and Company.
Okay, so before the break, we were talking about LLY's track record and that dividend growth.
11 years in a row.
Wow, impressive.
It is.
But let's get into the nitty-gritty of their financials.
The numbers.
The numbers, exactly. What can you tell us about their revenue and profitability?
Well, just to give you a sense of scale, their market cap is a massive $707.21 billion.
That's huge.
It shows that the market really believes in their ability to make money in the future.
That makes sense.
Over the past 12 months, they brought in $40.86 billion in revenue.
Okay.
That's a year-over-year increase of 27.41%.
27% growth? That's incredible.
It's a big jump for sure.
But revenue is only one piece of the puzzle, right?
Exactly.
What about their profit margins?
Are they actually turning those sales into profits?
That's the key.
Absolutely. Their gross, operating, and net profit margins are all very healthy.
That's good to hear.
They're managing costs well and squeezing profits out of their operation.
Very efficient.
Exactly.
Okay, but no company's perfect, right?
Correct.
What about their debt?
Yeah.
We hear a lot about corporate debt these days.
It's a valid concern.
So is it a problem for LLY?
Well, they do have a significant amount of debt, it's true.
Okay.
Investors need to be aware of that, but it's important to look at the whole picture.
What do you mean?
They generate a ton of cash flow,
Oh, okay.
so they can handle those debt payments no problem.
So it's like a calculated risk.
You could say that they're borrowing to invest in growth, research and development acquisitions.
If they can get a return that's bigger than what they're paying in interest, then it makes sense.
Precisely.
Right. So it sounds like their financials are pretty solid.
So far, so good.
But what's the market saying about LLY?
The overall sentiment seems to be positive.
Really?
Analysts are giving the stock buy ratings.
That's a good sign.
They see the strong fundamentals and the growth potential.
So they think the stock price will go up.
The average price target suggests there's room for appreciation.
Interesting.
And a lot of institutional investors own a big chunk of LLY stock.
Those are the big players, right?
Exactly. The mutual funds, the pension funds.
They tend to do their homework.
They don't throw money around lightly.
So their investment in LLY is a vote of confidence.
You could say that.
Okay, but it's not just about the big institutions, right? What about the overall market?
Even with some ups and downs, the market seems to have faith in LLY.
What makes you say that?
Well, remember when they announced lower than expected revenue for the fourth quarter?
Yeah,
The stock price dipped a little,
makes sense.
but it bounced back pretty quickly.
So investors weren't panicking.
They seem to be focused on the long-term LLY's overall growth potential.
That's a good sign.
It is.
Okay, but to really understand what's going on, we need to look at who's calling the shots.
The ownership structure.
Exactly. Who are the major players behind LLY?
Well, as we mentioned, a big portion of the stock is held by institutional investors.
Those big financial institutions.
Exactly, and they usually have some influence on the company's decisions.
They can push for changes.
They want to see the company succeed, after all.
Makes sense. But what about the people actually running the company day to day?
The insiders.
Yeah, do they have skin in the game?
Interestingly, insider ownership at LLY is relatively low.
Huh, that's surprising.
Some people might see that as a lack of confidence from the leadership,
I could see that.
but it probably just reflects LLY's size and maturity. They've been around for a while. They have a diverse shareholder base. Lower insider ownership is to be expected.
So not necessarily a red flag.
Probably not.
Okay, but if the institutions and the insiders don't own most of the shares, who does?
The biggest shareholder is actually the Lilly Endowment, Inc.
What's that?
It's a foundation established by the Lilly family.
Oh, wow. So the company's history is still tied to its ownership?
Definitely adds another layer to the story.
It does.
And to really assess LLY as an investment, we need to look at their overall risk profile.
Okay, how do we do that?
We can use a SWOT analysis.
What strengths, weaknesses, opportunities, threats?
Exactly.
Okay, so let's start with the strengths. What are LLY's biggest assets?
Well, they have a strong brand reputation built on a long history of quality.
People trust their products.
Exactly. And they have a robust pipeline of new products,
New drugs in development,
some with blockbuster potential addressing unmet medical needs.
like diabetes, obesity, Alzheimer's.
Right.
And they're a global company.
That's a huge advantage. Gives them access to diverse markets and customers.
Helps spread the risk.
Absolutely.
Okay, but what about their weaknesses?
Every company has them.
Where are LLY's vulnerabilities?
Well, one thing is they rely on a few key products for a big chunk of their revenue.
Not very diversified.
Exactly. If one of those products faces problems like competition or patent expirations.
It could hurt their bottom line.
Right, and we can't forget about those high debt levels.
I talked about that earlier.
It's manageable now, but if interest rates go up or their cash flow weakens.
It could become a problem.
Exactly. And another potential weakness is their reliance on manufacturing capacity.
They need to be able to produce enough medicine.
Exactly. If there are disruptions to their supply chain.
It could impact their ability to deliver products.
And potentially damage their reputation.
Okay, so lots to think about there.
Definitely.
But let's shift gears and talk about opportunities. What's on the horizon for LLY?
Where's the growth potential?
Exactly.
One major opportunity is expansion into emerging markets.
Countries with growing economies.
Exactly. These markets have rising healthcare needs, and more people can afford medications.
So there's a lot of untapped potential there.
Huge potential.
What else?
They can also get more out of their existing products
How so?
by exploring new indications for their drugs.
So finding new uses for existing medications.
Exactly. Expands their market reach.
Clever.
And of course, they're investing in new research and development.
Always looking for the next breakthrough.
They're also doing strategic acquisitions and collaborations.
Teaming up with other companies?
To get access to new technologies and therapeutic areas.
So they're not just relying on their own internal R&D.
They're looking outside as well.
Smart move.
It is.
Okay, but we can't ignore the threats. What could derail LLY's success?
Good point.
What are the big risks?
Well, the pharmaceutical industry is super competitive.
Lots of players.
LLY faces threats from both big established companies and new startups.
Keeps things interesting.
It does, and patent expirations are a major concern.
When those patents expire.
Generic competition floods the market,
Driving down prices.
eating into profits.
So LLY needs to keep innovating.
Stay ahead of the curve.
What about pricing pressures?
That's a big one.
Drug prices are a hot topic.
Governments and insurance companies are always looking to cut costs.
So LLY has to walk a fine line.
Balance revenue generation with affordability.
Not an easy task.
Definitely not. And then there are the regulatory challenges.
The FDA and all those regulations.
LLY needs to stay on top of those evolving regulations, comply with all the requirements.
Sounds complicated.
It can be.
Okay, so we've talked about the business, the financials, the market, the risks. But what about patient safety?
That's crucial in the pharmaceutical industry.
Absolutely. People's lives are at stake.
LLY has a robust system in place to monitor the safety of their medications.
That's reassuring. What does that system involve?
They collect and analyze data from clinical trials, reports from doctors, and post-marketing surveillance.
So they're constantly watching for any problems.
Exactly, looking for any potential safety issues.
And if they find something?
They take action, they might update the product label, or communicate important safety information to doctors and patients.
So they're proactive about addressing risks.
Absolutely. Patient safety is paramount.
Okay, so we've covered a lot of ground with Eli Lilly and Company.
We have.
Their business, their financials, their market, position, their risks. But before we wrap things up, we need to talk about one more thing.
What's that?
Sustainability.
ESG, environmental social governance.
It's not just about profits anymore. Investors want to know that a company is being responsible.
Absolutely. So how does LLY measure up in this area? We've been talking all about Eli Lilly and Company.
LLY.
LLY. That's right. We've looked at their business model, their financials, how the market views them, and the risks they face.
And now?
As promised, it's time to dive into their commitment to sustainability.
It's a big deal these days.
It is. Investors are looking beyond just profits. They want to know that a company is acting responsibly.
Exactly.
Yeah.
So where does LLY stand in this whole ESG arena?
Well, they're definitely making an effort to incorporate sustainability into their operations.
Okay.
They've got a bunch of initiatives to reduce their environmental footprint.
Like what?
They're focusing on renewable energy sources.
Okay.
Water conservation, waste reduction.
You know, we talked about their Limerick site earlier.
In Ireland.
Yeah, it's designed to be way more energy efficient and eco-friendly than traditional manufacturing facilities.
It's a good example of their commitment.
It is. So it's not just talk. They're actually taking action.
Actions speak louder than words.
Exactly. And it's not just about the environment either.
Right.
LLY is also working on diversity and inclusion within their workforce.
Creating a more inclusive culture.
And they're involved in initiatives to improve access to healthcare.
Especially in underserved communities.
So they're taking a pretty holistic approach to sustainability.
They're thinking about the environment, social impact, and governance altogether.
It's about creating value for everyone, not just shareholders.
Exactly, a long-term vision.
Okay, so we've covered a ton of ground in our deep dive into Eli Lilly and Company. You've looked at their business, their financials, their market position, the risks, and their sustainability efforts.
The big question is,
does LLY pass the Warren Buffett test?
Would he invest?
That's what we want to know.
Well, based on our analysis, I'd say they have a lot of the qualities Warren Buffett looks for.
Okay.
They have a durable competitive advantage.
Strong brand, innovative products, global reach.
Right.
And their management team seems experienced and capable.
They've got a long-term vision for the company.
And financially, they're doing great.
Consistent growth, good margins, committed to paying dividends.
Plus, they have that amazing history of innovation.
The first to make commercial insulin.
Back in 1923.
They're still pioneering new treatments today.
And as we just talked about, they're tackling sustainability head-on.
They get it.
They do. So it seems like they check a lot of the boxes.
You do?
But of course, no investment is without risk.
Right.
LLY faces challenges like patent expirations,
Pricing pressures.
competition.
That's a tough industry.
It is, but overall, they seem to be handling these challenges pretty well.
They've got a clear strategy, and they're focused on growth.
So for investors looking for a company with a solid track record, strong fundamentals, and a bright future,
LLY is definitely worth a closer look.
I agree, but as always, do your own research.
Talk to a financial advisor.
Think about your own goals and risk tolerance.
Make informed decisions.
Exactly. We've given you a deep dive into LLY.
But the ultimate decision is yours.
And if you enjoyed this deep dive, make sure to subscribe to the Stock Analytics AI YouTube channel for more in-depth analysis and investment ideas.
We're always on the lookout for interesting companies.
And leave your suggestions in the comments.
We'd love to hear what you think.
Just a quick reminder, this deep dive was based on publicly available information and AI-powered analysis.
It's not financial advice.
Always do your own research before making any investment decisions.
Thanks for joining us.
Happy investing!